My name is Toby, and I am flesh and blood like you. And I am here to break the whole blockage of trading and investing and the ideas that people have around it. And hopefully, by the end of this first episode, you have a clear picture of whether it is something you'll be interested in or not. I have titled episode 1 as Misinformation and Clarity because I'm trying to start from the foundation, okay? And that is usually with bad information. All over the internet, everyone is telling you the wrong things at the beginning. And because of that, it shapes a very, very, will I say, wrong mindset. To put it that way, it shapes a very wrong mindset right out the gate, like right out the beginning. You're already on the wrong path because trading is a highly skilled profession. Okay, it is actually a profession. Speculation is a profession. Some people do not refer to it as that. It's not gambling, it is a profession. Okay, and the reason why the, the the masses or the majority of the masses would fall into traps like this is because of number one, fear. Fear is a useless emotion in this profession, but that is what the advertising that we have today in trading world is capitalized on. Okay, it's capitalized on fear because they know that people are afraid of inflation. The ever rising inflation is causing fear and it will not stop. Okay, that is the intention of inflation. It's not supposed to make things feel good naturally as a human being. When you hear that prices are going to go up, the first thing you're going to worry about is how do I make more money to mitigate this increase in price? And because trading is so highly skilled or it requires such a high amount of skill, there are not so many people that have it on lock. And I'll be honest with you, is about 2%. The stats are there. You don't even have to take my word for it. You can go and check. Okay? So that fear alone is enough to put you off track because now you're in a field where no one is giving you real advice or real information, and everyone else is showing you their Lamborghini and the 6-bedroom duplex that they just bought from trading profits, never really connecting the dots of how a new person can come on board and actually make money from speculating. So they capitalize on that fear, you eventually start to lose from the beginning. Another key point is greed. If you check YouTube now, the most ads that you will see are ads that are promising you an unreasonable amount of profits in a short period of time. And to be honest, it still boils down to the mindset that you have. If you have the wrong mindset, that kind of advertisement, that kind of attraction will pull you in, and then you end up thinking you can make $1 million in a month, and you will lose the little that you have trying to grab that. So that's another point, greed. These are key points that you might have to work on your own as a trader. You can't learn this in the books, okay? This is self-analysis and self-reflection. That's how you deal with these emotions, I'll term them, fear and greed. The third one is hope. And this is where, for Nigerians, this is where we miss it because we tend to use hope to get through most difficulties. And inflation is not something you want to use hope to get through. You need to be calculative. Okay, you need to have your numbers right, or you just be there when it happens. Okay, you cannot outperform inflation by just hoping that things get better. And advertisers know this, so they're going to pivot and they're going to make sure that you stay hopeful without any basis whatsoever and you get on the wrong path from the beginning. So I'm trying to clarify all that and to sort of guide you onto the right mindset, which will now give you like a foundation to build upon. So I have a few things in my notebook here. I hope you brought your notebook too, because there's a lot of things to write down. The first thing you need to understand is why we trade. I've mentioned inflation as one of the reasons why, trying to outperform inflation. But aside that, is a very good source of income for anyone willing to put in the work. Okay, you have to put in the work. Just like any other profession that you spend years studying on, you have to put in the work. There's this famous trader, William Delbert Gann, that in one of his books, 45 Years in Wall Street, I recommend that book. If you have the time, please take out the time and read that book. This is someone that traded in 1900s, okay? So you're not here to reinvent any wheel, okay? This has been going on for hundreds of years. You're not here to reinvent any wheel. It's already a working machine. You're just here to find your footing and find what works for you and then build on that over time, okay? So you're not here to do any magic, okay? And in that book, he stated it that speculation is a serious profession, just as a medical study and as serious as engineering as well. But most people think we're just clicking buttons and all that. That's part of the misinformation, okay? There's more to trading than just buying and selling, okay? So you might have to put in, you will have to put in the work in studying and gaining knowledge on a daily basis. Okay, you don't learn today and then leave it and cover it and then come back next week. That might be your rate of studying, but if you want to hit it hard, you might have to be, consistent about studying, peeling at it, learning the ropes, and with time, you'll find your footing. Okay, it takes time. I will be honest with you. It takes a lot more time than people are willing to tell you. And then retirement. This is what actually drove me to learn about trading. I was looking for how to plan my retirement right out the start when I started working in 9 to 5. And I looked at pension, I looked at a lot of other means of making money when I'm no longer in the workforce. And I found I was very limited. It still is very limited. And if that doesn't spike any fear in you, then you must have a heart of steel or something. But that was what drove me to dig deeper and say, okay, in an ever rising economy or in a country where inflation is ever rising, how am I supposed to stay afloat, as someone who does not have a job or is not in the job market or, and then obviously running a business is one of the things that came to mind. But then even running businesses, they are still met with the same difficulties of inflation, whereby your running cost is increasing, and then that now trickles down to your operations, and then the cost of your product or service at the end of the day has to go up. Customers don't like prices going up, like it is new to them. Customers know that things are supposed to go up. Well, not supposed to, but that's how it's been engineered right from time. But then they grumble when the prices go up. Even we too are guilty of that thing. You act like you don't know inflation is constant. this is the only business that keeps you afloat of inflation. I will say this because at the end of the day, you're learning how to basically print money, okay? This is where you learn how to build your own ATM machine in your house. This is not, this is uncut, okay? This is where you learn how to build your ATM machine in your house because you do not need any other person. It's not a team play. You don't need any other person to move any bricks for you. Except obviously you're not doing the trading yourself, then there will be a portfolio manager in that respect. But this is the only line of work that you don't need to sell any product or service, and you get paid for your time in front of your screens, just speculating, okay? So to clear the fog, I have a list of things really that I want to talk about. And the next thing that I think people will want to know is expectations, right? Everyone has already set expectations about what they're going to get from investing. And I think is mostly right and mostly wrong in the sense that whenever you find a new avenue to make money, there's a high chance that your financial status at the time or your mindset with money at the time is going to dictate how well you do in that niche or in that particular avenue that's supposed to bring money for you. And because of this, there are opportunities that others will make money from, and there will be some people that will still be looking and watching as it goes by. And then you just have to let things play out. That's just the truth. But with trading, you kind of have an idea as to what you're signing up for beforehand, and it's not something that you cherry pick. Okay, I will be honest with you. There's a lot of work that is involved, and I don't want to give you the wrong idea of, oh, you cannot make $1 million trading. You can make millions of, look, you can make ₦1 million a day trading, okay? Take this from me. This is proven fact, okay? I have receipts. You can make $1 million per day trading, but what are you putting on the line? What exactly are you putting on the line to be able to rake in that kind of profits? That's the question you should be asking yourself, because with pyramid schemes and Ponzi schemes that go up and about the internet, most people have the wrong ideas about expectations, okay? Like, what is the ideal amount of money that a venture should give me in set amount of time? You need to be realistic. With trading, you can make a lot of money, and then you can also lose a lot of money. That's why the control is up to you as the trader, as the operator, as the speculator. It is up to you to determine, as I am now with my financial status, what can I put down and what am I hoping to scrape off this money that I'm putting down. Have realistic goals. You need to be as realistic as the numbers. There's no wishful thinking with trading. You can write this down. There is no wishful thinking with trading. I had said this in the beginning, that fear, greed, and hope are the three adversaries that will make you regret this decision or make you frustrated right at the beginning. You are afraid to lose money. You are greedy because you want to get all the money. And then you're also hopeful because you do not want to do the work and the mathematics that is involved with profitable trading. Those three adversaries are the greatest demons that traders are fighting today, okay? So take this as a preventive medicine. Take this webinar series as a preventive medicine, because it will come, okay? The fear will present itself. the greed will present itself, and the wishful thinking or hope, as I like to term it, will present itself. It will come, and you would have to have the self-discipline. You will need to summon that self-discipline within you to actually weather the storm. And once that is in the bag, you can now start talking about making profits. Okay, this is the most profitable venture in the world. You can go and check. I'm not making this up. Excuse me. The trading industry has about $7 trillion of daily volume. And what that means is every 24 hours, there's $7 trillion available for the market makers and commodity traders, basically, to access and trade with. That's $7 trillion. If you're trying to get 0.001% of that, that's still a lot of money. But that's, by the way, that's too much money to be thinking about at the beginning. But this again is how they trap people with the misinformation. Okay, you have a countless amount of ads that tell you, I just made $100,000 with this strategy. I just made $300,000 in 4 minutes with this strategy. They're not going to tell you how many times they lost, okay? And they're not going to tell you how great in percentage the losses were, okay? So in terms of expectations, you have to be realistic about how much you're putting down and how much you're willing to scrape off. Because with traditional modes of investing, like we know, let me use piggyvest for example, or the dividends that banks pay. I believe it's about let me Google that in a second. I believe it's about 8% per year. In trading, 8% is very little, right? But that only depends on the amount of capital that's involved. So now this is where the mathematics comes in. If I have 100,000 naira in my account and then I make 8%, I would have made 8,000 naira, right? If Mr. B has 100 million in his account and he takes the same trade that I take that made me 8%, and he also makes 8%, he will be making how much? How much will he make? Just type it in the chat if you can do that math real quick. I want to see the answers. How much will Mr. B be making? If I have 100,000 naira in my account and I make 8% in a trade, and Mr. B has 100 million in his account and takes the same trade and makes 8%, how much did Mr. B make? I want to see your answers in the chat box. It's simple mathematics. So trading will require that you do this kind of math in seconds. Okay. So please, if you can, okay, I'm not seeing any chat messages. No. So basically, I'll just give you the answer. That's about 8 million. Okay. The same trade that gave me 8% profits gave me 8,000 naira, but gave Mr. B 8 million. What does that tell you? It tells you that, yes, 8 million, yes. So it tells you that the same movement in price or the same gyration in price, either up or down, it doesn't even matter, because in trading, you capitalize on both sides of the market. You can write that down somewhere. You capitalize on both sides of the market. If the market is going down, you can actually be a seller. You don't have to just buy everything and hold. You can actually be a seller, okay, and capitalize on the market, whichever way it's going. So with this example, I'm trying to draw your perspective to real life expectations, okay? I'm making 8,000 naira on a trade. Mr. B is making 8 million on an 8% increase. That just tells you that he has put more money on the line than I have, and I should not be looking for Mr. B's kind of profits. That's just the reality. Most people want to make all the money they can make in trading by risking a small amount or unrealistic amount. And to be honest, no amount is unrealistic to risk, but it's the reward that gets people off balance. Like I said, wishful thinking is not useful. And that's where people start putting in different figures in their mind as to what they're going to get from a little 8% increase from a 100,000 naira account. Okay, so the math usually does the work for you. It's pretty straightforward. The math does the work for you. You need to calculate. I'll be honest with you. There's a lot of mathematics that I've done in my school days, but it is nothing compared to the amount of calculation I've done in recent years. Okay, so it's very tasking, but once you get the hang of it, it's pretty much repetitive. Okay, so it's not something that is so cumbersome. Only at the beginning, honestly, only at the beginning. Okay, so in terms of reward, right? Like I was saying, you can make $1 million a day trading, but that only means that you're risking, let's say, 100,000 naira, 100,000 naira on a trade with a 1 to 10 risk to reward will give you $1 million in a day. I'll say that again. 100,000 naira on a trade with a 1:10 risk to reward will give you $1 million for that day. Why do I say this? It's not me being hopeful or thinking wishfully. This is mathematics, okay? But if you do not have 100,000 naira to risk, then you should not put up that trade. Because the moment you put on that trade, that's when you realize that you've messed up. And that's when the fear, one of those demons that I mentioned, will start talking to you. Okay, and then you start making rash decisions. Okay, so you have to be realistic about your stance financially, and then the goals that you set. Let's say your yearly goals, your quarterly goals, your monthly goals need to be set in figures. Okay, if it will take you to write down those figures and then paste it on a vision board or somewhere that you can see daily, then please do that. But you need to keep the numbers in perspective, going forward. Another thing that I want to talk about is someone asked me, I think it was yesterday, that what kind of trading am I going to be talking about? And then I just laughed and I answered the person trading. And then she was like, if it's that crypto thing, I'm not interested though. and that sounded like fear to me. And in my mind, I was like, I really need to do this series because a lot of people heard about cryptocurrencies when they first came out. I think I was part of those people, and I stumbled upon cryptocurrency as far back as I can see what exactly is trading. Okay, we're peeling at it. I stumbled upon cryptocurrencies as far back as I think that was 2012. That's about 13 years ago. And at the time, it wasn't rampant at all. As a matter of fact, the fear that people are having now, they still had as far back as that time, and then they won't want to do anything close to cryptocurrencies. And because, fortunately for me, I had a unit course in school on cryptography, and it allowed me to study the field of cryptography, and then also was the reason how I was able to stumble upon something like cryptocurrency. I started I started learning about it without even knowing what I was doing. To be honest, I was completely clueless. I just had a course in school to pass, basically, and then I had to get involved. But the truth is, in finance or in economy, generally, nothing is random. I want people to understand this, that nothing is random. When they tell you crude oil is selling at dollars per barrel, to tell you one country just found gold somewhere, it's not random. The only reason why you're finding out in the headlines is because actions and steps have been taken already, on a government level, okay? Because these people are making decisions with taxpayers' money, basically, and then the Federal Reserve, which is what backs each currency, each country's currency. Each country's currency is backed by a Federal Reserve, which is also backed by a various amount of natural resources. Like for Nigeria, as a case study, we know it's crude oil, right? We also know we have a whole lot of resources, but they choose crude oil. I don't know why. But that's what's backing our Federal Reserve, and in turn, that is what's backing the naira. For the dollar, it is gold. They have a very large amount of the gold reserves in the world, and that's what's backing the dollar. So each country, excuse me, each country has what its Federal Reserve is using to back its currency. So somebody asked just in the chat box now that what is trading? Well, you might want to look at it as speculation and not just trading, because what we're doing is exchanging currency for currency or currency for commodity without incurring the risk of holding these currencies. Okay, that's what electronic trading is. The fact that I buy let me open up a chart. The fact that I buy gold or silver or copper or soya beans or whatever commodity, and mind you, all those commodities are tradable electronically. Okay, the charts are there. You can go and look this up. You don't even. I want you to doubt me and go and check. Okay, the charts are there. Soya beans, wheat, all these commodities are tradable electronically, and the prices are set algorithmically. Okay, it's programmed. It's not somebody coming at the start of an office day and then saying, okay, soybean will sell at this price or crude oil will sell at this price. It is actually programmed, and if you're not informed to that level, you might think the market is working against you. Okay, so what trading really is exchanging currency for currency when it comes to forex trading. And then obviously cryptocurrency is almost the same thing. It's just that we're trading digital versions of these same currencies. Okay, where you have USD as the US dollar as we know it, but with cryptocurrency you have USDT or USDC. These are just ways that the market makers and governments, if you ask me, are using to deceive the public, because I still stand to say that economy is a fraud, right? And there is no real economy if prices are being engineered. Take this from me, okay? This is a wake-up call. Economy is a fraud and prices are engineered, okay? The fact that you can speculate and say the price of crude oil will rise for a certain amount of months and then fall for a certain amount of weeks and then rise for a certain amount of days again, just shows you that nothing is random. Okay, the general public might see it as random. They might see it as bad news or good news or bad news or good news again, but truly it's all programmed. And you need to be ahead of all of that to be able to outperform inflation, which is why we're where we are right now, okay, with this series. So I was talking about cryptocurrency, and I needed to drive that point in. The different types of trading or the different avenues that we trade with still boil down to the same thing. We're trying to speculate and say, this is where I think the price of so commodity or so currency will be at the end of the year, or at the end of the quarter, or at the end of the month, or at the end of the week. And I am going to be a buyer if it's going up, or if I think it's going up, and I'm going to be a seller if I think it's going down. Period. To put it simply, that's your job as a speculator, that's your job as a trader. Now, how you arrive at your facts is where technical analysis and fundamental analysis come in. What technical analysis is you actually doing the numbers on your charts. That's with candlesticks and bar charts, looking at the actual price charts and saying, okay, where should price naturally gravitate to? And then fundamental analysis, this is where you go to economic news platforms, and then you keep up with important news details about the specific currency or commodity that you're about to trade or you're about to invest in. It's as simple as that. And one thing that most people are not aware of is time cycles, okay? Even the Bible tells us about 7 days of plenty and 7 days of farming, okay? I believe most people don't realize that that's how the world works generally. It's supposed to have ups and downs, okay, since the beginning of time. So you being hopeful and thinking wishfully that something is just going to go up and keep going up, it's going to hurt you, okay? So you always need to have a reality check at every point in time when you're investing in any markets, any money markets as a whole. You have to be realistic. You have to have a big picture perspective of where things will likely gravitate to and how you would weather the storm on your way there, and how much profit is available to you and how much risk exposure you're putting yourself in. It's as simple as that. Okay, you always need to be abreast with those sides of your decision making in the market. And with that, repetition is how you master the skill. You have to show up, you have to practice, you have to study. These are non-negotiable, okay? If you think because of one episode, you're going to be armed with the tools that you need to start making money every day for the rest of your life, then you're not being realistic and you're not being true to yourself, okay? This is the ATM machine. This is where you print money for life. This is not MMM or some scheme that is going to disappear. Like I told you, I've studied traders that traded in 1900s, and they had charts that had prices running from 1880s, 1890s. This is over 200 years ago. So I'm not just trying to reinvent anything here. I'm bringing facts to your table because I foresee something, and I don't mean to be a prophet of doom or whatever, but the way this country is going and the way the world is going as a whole, people will need to be financially armed to weather the storms that are coming. I don't think people are prepared enough. This might be quickest. I don't want to use the word quickest because then you think it's a sharp thing. No, it will take time. But the moment you get this thing running, you have an ATM for life. Okay, take this to the bank. Even the banks know. The banks use your money to trade. The money you deposit in your banks is just paper. Okay, it's just on paper. You see a figure on your account balance. The real cash has been put in money markets. Best believe. Okay, if you know anyone in the banks that is willing to share some secrets to you, you can ask them. They'll tell you the real cash has been put in money markets just so that it can accrue something. Why? Because if you're not trading, your money cannot grow. Okay. I say this to say that, to emphasize that money is not a raw material. Okay. I want you guys to write that in the chat box. Money is not a raw material. Okay, someone says, what exactly is trading? I'm a newbie, so I don't even understand what you've been saying. It might take you a rewatch of this recording to actually get up to speed, but don't worry. There's nothing new under the sun. And trading is definitely one of those things that are not new under the sun. So the reason why it sounds so vague and so out of sight is because it has been hidden from you for a very long time. Okay. And strategically so, just so that the financial freedom that we need is not readily available. Okay. Money is not a raw material, and because of that, it cannot accrue any value on its own. It needs to be put into something that will bring value, which will in turn bring more money back. So this is why we trade. Okay. We have different niches in trading. I talked about cryptocurrency, forex trading, which is basically just trading the major currencies, major and minor currencies, basically the euro, the British pound, the dollar, the Japanese yen, Australian dollar, New Zealand dollar, to name a few, right? And these currencies are traded against each other. So I'm sure you must have been seeing, or if you haven't seen, your research would show when you eventually do it that these currencies are traded against each other. So you trade the euro against the dollar, or the euro against the yen, or the pound against the dollar, or the Canadian dollar. It doesn't really matter what currency exactly you're trading, but with time you will know how to choose which and which you'll be interested in based off of what it can give at a particular time. Okay, that's the whole idea of speculation. When I say, oh, by the end of this year, I expect crude oil to be selling at a higher price than it is right now, I am saying to myself that based off of my analysis, based off my mathematics and calculation, I can see, or I can foresee, a higher price in crude oil. Crude oil is the commodity, and we all know that the prices of crude oil are set in dollars. Okay, so dollars might be the currency that I'll need to hold as the trader in my account, in my broker account. And then crude oil is the commodity that I want to trade. And I want to be a buyer because my speculation or my forecast is telling me that crude oil is going to be selling, or is going to be at a higher price, maybe by the end of the quarter, or by the end of the year, or after a certain amount of years, right? And to make profits, I'm going to buy now and hold for that time period. That's essentially your job as a speculator, okay? And once the trade is on, there isn't much you're going to be doing other than just watching the markets and seeing how things unfold. If you're actually right, or if you're wrong. If you're right, you make money. If you're wrong, you lose the amount of money that you have risked at the beginning of the trade. Most people fear losing all their investments. Excuse me. Most people fear losing all their investments in trading. And the truth is this: fear, like I said, is a useless emotion in this profession. It will not get you anywhere because all it would do is make you to make rational decisions about these trades. Okay. So basically, you do not want to be afraid. You want to be calculative. You want to have the numbers at your fingertips and say, okay, if I have $1,000 or I have $5,000 that I want to invest in trading. First of all, a rule of thumb that I would advise that you follow is to divide your capital into 10. Okay, this is where you write stuff down. Okay, because I'm saying a lot of things and it will come full circle maybe when you rewatch the video or you go through your notes from what you take from this. Okay, I have 5,000 in my account and I want to put it into trading, right? The first step you need to take is to divide that capital into 10. Okay, so that will be $500 a piece. So now I take $500 and then I put $4,500 somewhere. I keep it somewhere, right? It's still for trading, but I do not expose it to risk. Okay, this is a key. This is a key step that you'll be able to use to alleviate fear of losing everything. Why? Because it's mostly a psychological barrier when you have a lot of money exposed and you do not know where things are going. Okay, you're not sure, and then your money is just there in the account. The best thing you can do is, okay, let me just take 1/10 of this money and see what it does, right? And you build your expectations based off of that 1/10 of your capital. You don't look at the entire 5,000 and say, okay, this 5,000 is going to bring me $1 million. No, you build your expectations and you do your calculations based off of that 1/10 and say, until I lose this $500, I'm not going to look at this 4,500. I need to see what this $500 can do for me in this crude oil trade, for instance, or Bitcoin trade or whichever. Mind you, there's a certain hierarchy that no one talks about with trading and how everything is connected in full circle, right? We know about cryptocurrency, we've heard about Forex, we've heard about treasury bills and bonds, we've heard about stocks, right? So there's a certain hierarchy that has been kept, I don't know, will I say kept secret or has not been voiced out as loud as it should be. But the treasury bonds is what controls the Forex market. Okay, this is what you can write this down. The bond market, the treasury bond market controls the Forex market. The Forex market controls the stock market. And then the stock market controls the cryptocurrency market. Okay. So to draw a line in the sand is to say that treasury bills is how the Federal Reserve would do its projection in terms of inflation rates, rate hikes, rate cuts, GDP, unemployment rates, how they measure all that. It usually reflects on the bond market, right? And all these different markets are tradable, by the way. They are individually tradable, but with the way I approach the market, I use it as a meter. I use it to weigh my options and to weigh my bias in the market and say, oh, what is the market maker thinking? I put myself in the shoes of the market maker and say, based off of these different niches that are actually connected, but they won't tell you. This they call it different types of trading. These different units are connected. Okay, when the bond market goes down, forex is going down, or rather, when the bond market goes down, forex is going down, and when the forex market is going down, stocks are going up. Why? Because it means that people are now putting money, instead of buying foreign currencies to keep, they rather exchange those currencies for stocks in companies that are doing well, in a way to kind of get back their money from a declining bond market. Okay, I'll say that again. People put money, okay, in stocks from foreign exchange. Okay, I think I've mixed that up. So let me start this again. The bond market controls the forex market, and then forex market controls the stock market, which further controls the crypto market. So when the bond market is going down, that's an invitation that the forex market is going to go down. Because why? People see, as foreign investors see it as an indication that things are not working well in that country. And the first instinct is to, unfortunately, be fearful and panic and take their money away. So in order not to lose on taxes and withdrawal charges and all that, they channel the money into stocks, okay, to see how they can get what they've, lost on those small declines in the bond market, which is what started all of this. Okay, it's like a snowball effect, so to speak. So if the bond market is going up, obviously foreign investors are happy. It means that things are going well in the country, so there's no reason to panic. Stocks don't necessarily show any effect or very little effect, because the money that is there is still there, and then their foreign investments are doing well. And then obviously the crypto market, which is more volatile than all of them, is still subject to what the stock market is doing. Okay, put yourself in the shoes of an investor. Let's take Amazon for example, just for an example now. Let's say you've invested $1,000 in Amazon stocks, and things are going pretty well. You've made, let's say, like a 60% on your initial capital. You can then take some of that and buy Bitcoin or Ethereum or Solana or some of these cryptocurrencies that are doing well, just so that you can make more money. But your initial capital is safe, and you've also seen profit. The main goal is to make profit. Okay, it's not about trying to show that, oh, I'm some supernatural trader. The main goal is to make money. It's as simple as that. It's to make money. And because no one is talking about the correlation of these markets, some people think that they can just get into crypto when they have money for it. Some people think they can get into treasury bills when they have money for it. Some people think they can get into forex when they have money for it. But you need to understand the tides. You need to understand the state of the market, whatever market it is, whenever you get there. Okay, it's not because you have money for it now that it will now start yielding for you. That's wishful thinking. One of the demons that I mentioned at the beginning. Okay, so you have a lot of work to do with peeling at these different areas of information and educating yourself. Okay, the reason why they're not teaching this in universities is because it's more complex than just reading textbooks and figuring out where you stand as a financial analyst or a speculator. All these terms are just to refer to the trader. Okay, you're a trader, regardless of the commodity. You're a trader. Another thing I wanted to talk about is the psychological part of trading. Okay, which we don't see in adverts. We don't see in those unrealistic ads. Is that it can take a psychological toll on you, the trader, on the good side and the bad side. Okay, and you need to be prepared for those things, those motions. You need to be prepared. Like, you're going to be very happy when you're making money, and at the same time you might feel very bad when you're losing. Those two instances are the motions that you go in and out of as a trader, and you need to realize that it will pass eventually. So even the euphoria from a winning trade can just be as damaging as the sadness from a losing trade. So what your job is psychologically is to find that midpoint, okay, that balance in your decision making, whereby your decision making is not conflicted by any wishful thinking or hopeful thinking, and also not by any fear or doubt or any of that stuff. Okay, you need to be level-headed and clear-minded in this profession. Okay, and what else do I want to cover? I also have common questions that have been asked about the age gap as to who can be a trader. Or look, Warren Buffett started trading at the age of, he started learning how to trade at the age of 10. When I found out about this, I was mad. Okay, I went crazy. Age 10, and somebody was already teaching this man how to be a speculator. It just shows you how far behind we are in our own world in Nigeria, whereby nobody's talking about that stuff when you're growing up. When you're in high school, still no word about it. You go through university, still no word about it. You've done 10 years in civil service, still no word about it. And then when it now comes to the time where, okay, you're maybe exiting the job market, and then, like I said in the beginning, why I got into trading was because I was trying to tie down my retirement from a very early stage. You now start being fearful because the money you have is the money you have, right? And then you're trying to look for something that would bring back a certain amount of money, maybe periodically or as frequent as you will need it, or you want to spend or use for your daily needs or operational costs if you're running a business, you know. And nobody was saying anything about, oh, learn how to trade, learn how to speculate markets, learn how to, move with time cycles, learn how to read price. Nobody was saying that. So when I see the question, what age? The people that I learned from are way older than I am, and I'm pretty much young, right? But I have people that are in their 70s that are trading right now. And then what they told me and what I've seen is that most of them had 30 years of experience, 40 years of experience, 50 years of experience. And it just boils down to the fact that we are not talking about this thing enough in Nigeria, okay? The fact that they have 50 years of experience and they are in their 70s, you can do the math. It means in their college days, they were already in this thing, okay? And making money from it at that, not just, dilly-dallying and trying to see what works. They already knew that it worked, okay? They had all the facts around them. They had all the books, the best books, okay? They had all the resources, okay? So when you say what age is, start now, okay? You're not starting to make $1 million tomorrow. I've already told you about how unrealistic that is. But I know to a fact that trading is something that can give you $1 million, 10 million on a daily basis. and you don't even have to trade every day as a trader. My personal approach is to trade the weekly expansion of the gold market. I'm a gold trader. It's just the asset that I fell in love with. I can trade any asset class because my strategy works for every asset class. Okay, so what you're going to be learning as a trader is technical and fundamental analysis to tackle any asset class, any commodity, be it stocks, forex, crypto, treasury bonds and bills, orange juice, soya beans, you can name it. These commodities are listed on the charts. You can go to tradingview.com. Don't even take my word for it. I want you to doubt me and do the work. Go and search, okay? Go to tradingview.com and look at the commodities that are listed there. This is how they book price ahead of us. This is how we just wake up to surprising rates of inflation, and everybody seems surprised at every point in time. Like, the price has gone up. Of course, it's going to go up. It has been engineered to go up months and months before you knew about it. So this is how you stay abreast with rising inflation and devaluation of currencies. Okay, it's not just Nigeria that's going through it. In America now, they're complaining about rise in prices of daily needs. Okay, so this just boils down to the fact that I mentioned that economy is a fraud. Okay, you might not want to accept it now. It's a lot to swallow, but I just hope that your line of study would point you in that part of clarity to see that there is no economy. Okay, everyone is just trying to outpace inflation in their own way, and trading is the most reliable avenue that is known to man. You can go and check. There's no business as profitable as trading. Okay, so to answer the question of what age, I'm working on a book right now that I don't know, God give me the grace that would demystify all of this that I've said to school kids, children in school. If there is a way that I can communicate this to them, that's what I'm working on now. There will also be a book for advanced trading techniques that people that are already trading and have not found their footing yet, they can use it to better their skills. And then if you're totally new as well, there will be a beginner's guide too, separately. But these are the stages that you might have to peel through to attain profitability. It's not new. I'll say that again. Trading has been for over 200 years. I'm angry at the fact that it's not widely taught in a country whereby we know how things are. It's crazy out here, and it's getting crazier. Okay, so not to put any fear or to alleviate anyone's mind, it's just to give you the mere facts. Okay, to bring clarity to and to shine light to what is really happening. Okay, you can make 10 million naira a day from trading, but you need to ask yourself, how much am I putting down on the line to make such amount of money on a daily basis? Okay, and you don't even need to trade every day. That's the advantage. Once you know this skill, the best of best traders are position traders. Okay, consequently, I will expand on the actual details maybe in the second episode. I hope to see you there. But I'm going to round this up with a quote that I got from Michael S. Jenkins, a very, very proficient trader of his time, is that a mistake not made is as good as a profitable trade. Okay? A mistake not made is as good as a profitable trade. And how that resonates with me is that a lot of decisions, a lot of financial decisions or trading decisions that come from fear, greed, and hope often look like mistakes once the mistake has been made. Okay, it never looks like a mistake until you've made the trade. That's when you realize, I shouldn't have done this. So, why did I buy this thing now? Oh, now you're worried about what will happen. Okay, the only reason why that is happening is because you do not have enough information behind the trade at the beginning. You don't have enough knowledge behind why you think a certain commodity or a certain currency or a certain asset class is going to move up or is going to move down. Like I said before, whether it's going up or down is not your business. Okay, you are above that the moment you become a trader. Your job is to alleviate or is to mitigate inflation as it comes by printing more money. Okay, I hate to be this crude, but that's what we're doing. We're printing money. Okay, your job as a speculator is not to be is not to be sentimentally attached to any asset class and say, oh, it's going down. If it's going down, you should be a short seller. If it's going up, you should be a long buyer. Period. Okay, these are cold hard rules that you might have to ingrain and with repetition build in your own character. So it's been an insightful. It's been a long. Wow, I've not talked for this long at a stretch in my entire life, but it's been fun. Okay, so I would like to open the floor for questions. I know you might have some things you want to ask, so please ask your questions. We'll give about 5 minutes for questions, and then we'll round up the meeting. Okay. And then next week, I would I would I would circulate the episode for next week, the title, and then I hope to see you next week to continue this series. It's going to be a packed series, and trust me, it will be worth it. So please type down your questions. Let's have all the questions that you might have. There's no wrong question or no little question or big question. Please, if it's bothering you and it's relating to trading, ask it. The earlier you get it out of the way, the better for your learning curve. Okay. So I'm waiting. You can just type it, or if you want to speak, you can raise your hand and just ask a question. Sorry about that. It's okay, Mr. Rich. So no questions. No questions means that everyone understands what I've been saying. How does hedging work? Okay. Please type in your questions. Type in your questions. Hedging is is um, is a means to mitigate profit and loss on both sides of the market. So let me use a practical example. If I am bullish on Bitcoin, let's say I buy Bitcoin and it has been rising for a certain amount of days, and then it now starts to fall, right? And it starts to fall aggressively. Not so much that it takes my capital, but it starts to fall enough to reduce my profits. I can open sell positions at the point where it's falling and make money off of those sell positions without touching my initial buy positions that I opened a couple days ago. Okay, let me reiterate that. If I am buying a certain asset or a commodity and it has been trending for an amount of days or weeks or hours, right? and it starts to fall, and the decline is so much that I can also make money from that decline, I don't need to tamper with my long positions, my buy positions, because on the longer term, I am bullish. But there's a short-term sell that I can make money from. So I will open sell positions as well to kind of mitigate that little retracement in price movement. I don't know if that answers your question, but that's basically what hedging is. Okay, it's like opening, buying, and selling on the same commodity, but at different time intervals. Okay. Okay, so any other question? Any other question? Please, no question is vague. Okay, this is a big industry. Okay, anything can confuse you. It might not be now. How does the Pi ecosystem play out in trading? Well, the Pi falls under the class of cryptocurrency. All right, as it is not a tangible currency, it is a cryptocurrency. So how does it play out in trading? Well, this just boils down to the fact that it is, how do you identify? This just boils down to the fact that everything is programmed, okay? From inception, from even before the initial public offering of Pi, before the initial coin offering of Pi, before it was listed on broker exchanges, it was already predetermined. The prices were already predetermined, okay? This is the secret that nobody will tell you. It was already predetermined. And now that it is listed on exchanges, I can trade Pi if I have another cryptocurrency to wedge against it, okay? So that's how it plays out. I can come in with my USDT. So USDT will be the currency that I use to trade Pi. Binance will be the platform where I do the trading, the electronic trading, and my profits will be in USDT. Okay, so as a speculator, I'm saying that, okay, today is Monday, and I feel like by the end of this week, Pi would have accrued 20% gain. Okay, this is just, speculative. This is not a real trade idea. Okay, don't quote me on that. Okay, so if I come with that stance at the beginning of the week, it means that I have, so then I convert my $500 from my 5,000. Okay, let's bring that idea back. I convert my $500 to USDT. I put it in Binance and I say, okay, since I feel Pi is going to increase over the course of this week, I'm going to buy $500 worth of Pi. And I feel like it's going to give me a 20% increase or a 10% increase or whatever amount of increase in percentage is going to give me is what I'm leveraging my capital against. Okay, that's how you trade cryptocurrencies generally, not just Pi. How do you identify when to enter a trade? So personally, I have rules of engagement. Okay, and this is not something you can learn over this Zoom meeting. But rules of engagement in trading is what will guide you on how to enter a trade with any asset class. Okay, it doesn't matter the asset you're trading. It is all programmed. Okay, it is all algorithmic. I cannot stress this enough. Okay, all these prices are algorithmic. It's not what you see in the news that is actually happening. There's a high chance that when you're seeing it in the news, you are 12 hours late. Take this to the bank, okay? There's a high chance that anything you see in economic news, CNN, Al Jazeera, all of them combined, as it relates to finance, there's a high chance that you're 12 hours late whenever you see it. Okay, so most of these things are pre-programmed. So when you want to enter a trade, first of all, you need to know what that asset class has been doing prior to the time you got there, okay? Past figures, past prices. And you do this from analyzing your charts. And then you need to, based on what you see in your charts, you determine premium and discount prices. If your analysis brings you to the fact that the specific asset class or commodity is trading at a discount, there's a high chance that it's going to go higher, and then you cannot decide to be a buyer. If your analysis shows that that particular asset class is trading at the highest price that's ever traded in a very long time and has shown an indication that it will go lower, then that's what will tell you that you should be a seller. Okay, your bias is neutral when you get into the markets. After you do your analysis, then you pick a bias and then you go through with it. It's not a thing of guesswork. Okay, you need mathematics behind this. You need chart data, and all these things are readily available to you. Okay, tradingview.com is a free platform where you can check charts and see the progression of different asset classes, be it the British pound, the euro, the dollar, the yen, cotton, orange juice, soya bean. Look, all these assets that I'm calling can be traded on a day-to-day basis with your dollars in your broker account. Okay, I'm trying to demystify all of this so it doesn't look bogus. Okay, they're lying. Every other person that tells you this thing is so cumbersome is lying. They do not want to tell you the crude facts. Okay, so I would take this as no further questions. If there are any more questions, please type them out and I'll do my best to answer them. Okay, I think I've answered everyone's question. How does hedging work? So yes, if you have any other concerns that maybe it comes to your mind after this meeting has ended, how do you reach us? You can send me an email. Let me put my email in the chat box. You can send me an email, or you can DM degeneratefloor on Instagram or Telegram. It's on the flyer. The username is on the flyer, but I'll go ahead and type it. This is my email address. Instagram. You can send a DM to degeneratefloor. So these are ways that I can. What is charting and how do you go about to analyze any market once you open the commodity or pair? So this I cannot cover in this in this meeting, but it's a very valid question, and I'm sure everyone will want to get a piece of this. But let me just give you a brief answer. It might not be everything you want to hear, but I will touch on it. Okay, charting is basically like a graph. Okay, x-axis and y-axis, like in mathematics. Okay, on the x-axis we have price that shows the increase and decrease in price, and then on the y-axis we have time. Let me see if I can open up my charts here. On the y-axis we have time. So that's basically what a chart is here to show you. Whichever asset class you're looking at is going to look the same. Okay, you see candlesticks with price up and then time horizontal. Okay, price is vertical, time is horizontal. So how do you chart? Let me go back to that question again. So how do you go about analyzing the market? Basically, you want to use the prices that are available to you. Okay, like I said, you're not reinventing anything. Everything you need is already there. It's already in the charts. If you want to ascertain whether an asset class is trading at a premium, you will see there. It would look like an upward progression whereby price is making higher highs and higher lows. You know price is going up. Okay, And if it's bearish or if it's declining or if it's going down, these are just the terms they use to tell you something is selling, right? Bearishness, decline, you know. If it's going down, you see lower highs and lower lows, and then you see the prices there. So how you now make a what now a 90% to 100, 90% to 100% certain decision boils down to your technical analysis skills, okay, which you have to build over time. Okay, you'd want to be selling at premium prices and you want to be buying at discount prices. Like the saying goes, buy low, sell high, right? It's pretty simple, but you don't just guess the low price to buy from and you don't guess the high price to sell from. The chart data would actually show you, if you give it enough time, it will actually show you, okay, this crude oil that I'm seeing now is as if after this $60, it will not go higher than this, and then it might decline to maybe $55. That movement in price from $60 to $55 is where you make your money as a trader. And now it might look like only $5 in price difference, but when you're putting your trade on, you get to determine the risk involved, the lot size. A lot size is basically the amount of contracts on the particular trade. So if I see that crude oil is selling at $60, for instance, and I forecast that it's going to drop down to $55, and then I sell, I go short when it's 60, but then I put like $500 behind my trade. That move from $60 to $55 is less than 10%, okay? It's about 8 point something percent. To do a rough mathematics, okay, you can calculate that. It's about 8% decrease. But because I'm putting $500, my profit will be also 8%, okay? And that will be what? You guys can do the math. If I put $500 behind a trade for crude oil that is selling at $60 with a forecast that is going to decline to $55, how much would I have made on my $500? $40. Thank you. So I would have made a $40 profit with that trade, just based off of the speculation that crude oil is going to decline 8%. So replace crude oil with whatever currency or commodity or asset class you're trading. That is how you have to be approaching the market at any point in time you decide to trade, okay? You are your own boss. Let me say it again. You are your own boss in this field of play. It's not a team play. You are your own oga. You determine your progress. You determine your learning curve. You determine your deliverables. You determine the tenacity that you give this this profession. Okay, nobody's going to hold you. Definitely not me. Not because I don't want to, but because that's not how I was taught. Okay. I was taught to be independent right at the gate, and it has really helped me so far. And that's what I'm trying to pass on with this series. Okay, you are your own boss. This is not a 9 to 5 traditional work field. It will take 10,000 hours. Okay, prepare for that, and not in a fearful way. This should actually gear you up to want to be part of this. Okay. So if there are no further questions, okay. Are brokers manipulative that they take back your profit? Brokers don't take back your profit, to start with. If there's any broker that is doing that, it's probably an unregulated broker, and very soon they're going to be wrapped up, okay? I have a broker that I use personally, and for how many years now has not failed me. You can research on brokers that you can use that are trustworthy. If any broker is taking your money, it is the broker and not the market. Okay, they're stealing from you. It's as simple as that. So, can brokers take your money? No. Are they manipulative? To a certain extent, yes, because that is where they make their money. Okay, there are certain avenues that brokers use to make money. One of them is called spread. Okay, I don't know if I can explain spread briefly enough, but spread is literally the difference in the bidding price and asking price when you're trading any commodity. Okay, the price you buy from is usually different from the price you sell from. Like, okay, let me use that bookie now. Bureau de change, for instance. When you want to sell dollar to Abuki, he will tell you, he's buying at 1,595. But if you want to buy the dollar, that same dollar, if you want to buy it from that same person, he'll tell you he's selling at 1,620. That difference in between the 1,590 something and the 1,006 is known as spread. Okay, that's the broker's money. It's not manipulative. They usually tell you when you're signing up. Okay, it's not manipulative. So if that's what you're asking about, then it's actually allowed. But other than that, there's no way they can take money from you. Okay, there's it's not it's fraudulent, and you should report. If anybody is taking your profits, then they're stealing from you. That's not what we're facing in trading. Okay. So I hope I was able to scratch that question. I will leave a link that you can use to register on Xness. Xness is the broker that I use, very trusted broker, and they have a lot of benefits. Okay, so yeah, that's the broker link. So with these few points of mine, I hope I'm able to convince you and not confuse you that speculation is a profitable profession. And I will be seeing you next week. Hopefully, next week, Monday, same time, with another episode. So, have a nice day, everyone.
Thank you for this first series. Thank you. Thank you.
All right. All right.
Okay.